The Old Dogs REI Network podcast is sponsored by Health IQ, an insurance company that helps health-conscious people like runners, cyclists, weightlifters, and vegetarians get lower rates on their life insurance. Go to healthiq/old dog, that's healthiq/old dog, to see if you qualify.
This episode of the Old Dogs REI Network is brought to you by Mino Studio.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is a show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes, type in Old Dog, spelled D-A-W-G, find our podcast, and subscribe. Well, we've got a fun show for you today. We're going to be mobile here. Well, probably not real mobile, but we're going to be close to that in having our guest be Jefferson Lilly. Jefferson is a self-made millionaire, mobile home park investment expert, educator, and industry consultant. He is the co-founder of Park Street Partners, which owns 23 mobile home parks coast to coast, totaling over $55 million in value. Prior to co-founding Park Street Partners in 2013, Jefferson spent 7 years investing his own capital acquiring and operating mobile home parks. Before becoming an investor full-time, Jefferson spent 9 years in sales leadership roles with 3 venture-backed startups in Silicon Valley. Jefferson has been featured in the New York Times, Bloomberg Magazine, and on the Real Money television show. He earned a BA from the University of Pennsylvania and an MBA from Wharton School of Business. Well, Jefferson, welcome to the Old Dogs REI Network.
It's great to be with you, Bill. Thanks for having me.
Well, we're glad to have you. This is going to be fun because actually, I think we're going to be having a little on-air debate. Actually, we're not going to debate, but we are going to talk about why you believe mobile home parks are better than apartments. So I think this is going to be really interesting for our listeners. But first, let's find out a little bit about you and your background. How did you get into this crazy real estate investing world here?
Well, Bill, as I say, when I woke up from the concussion, buying a mobile home park just seemed like a good idea.
I love it.
But seriously, I've always been interested in investing. I bought my first stock when I was age 17, some summer internship money, and that experience, evolved over the years, and then. I don't know, it's been now over 10 years ago, I decided that maybe I should actually get out of the stock market, at least diversify, buy some real estate. And I thought initially, well, hey, why don't I buy an apartment building, or maybe, a house. I've always lived in houses or apartments. So I was on LoopNet and just clicked for multifamily properties. There would be, 99 apartment buildings at an 8 cap, and, one mobile home park at 10 or 12 cap. And, I thought, well, that's absurd. I'm not buying a friggin' mobile home park. And I, delete the search results and go search in, some other town. And I'd probably be embarrassed to tell you how many times I had to get hit over the head. But, after searching in Lubbock, Texas, and Peoria, Illinois, and Omaha, Nebraska, and on for multifamily, and continually seeing this niche within multifamily yielding so much more money, finally thought, well, maybe I should look into it. That's how I found it. It was part art, part science, or part plan, part dumb luck, call it what you will. But I started researching the space, learning all I could about it, buying books and tapes and going to seminars, and built up kind of an unofficial advisory board of 10 guys that all owned mobile home parks. It took me about a year and a half from when I first got turned on to this space until I closed on my first mobile home park. And I was still working a day job at the time. I wasn't looking for a park full time. But anyway, that's kind of how I got into it. I wish I could say I had some great vision from afar, but, I kind of had to stumble into it. And there you go. So that was actually just about 11 years ago that I finally closed on my first park, and have bought another and started a partnership that owns about 23 parks. And we're about to launch another fund and go buy more.
Wow, that's great. Well, obviously it's done you well because you are continuing to move forward with it. You've built up sounds like quite a portfolio of parks so far. I'm actually fascinated with it because I have talked to a number of people that are in the space that are just doing really well.
Yep.
And, I was totally naive when I first heard about it because, I lived in a mobile home park. When I went to college, I inherited a 27-foot Silver Streak. I don't know if you've ever seen this, but it looks like a submarine.
Sounds like a 1950s era something.
Oh, yeah, definitely. 50s, early 60s type from my Uncle Bill. And so I used that to go to school up in Northern California in a little town called Columbia, which is in the Sierras, and I loved it. I mean, it was really fun. But that's about all I know of mobile home parks. Are the people that I met there. Where there was a fair number of students, but then there were a lot of other people, and then what you see on news reports every time there's a tornado going through Oklahoma. So those are kind of the only things I knew about mobile home parks, and so but obviously this is an asset that seems to be a strong one, and I wanted to kind of see as you started getting involved in this, as you're looking at other real estate, what really drew you to mobile home parks, and what's kept you in the mobile home park arena?
The cash flow.
Okay.
It's certainly not certainly not as sexy and glamorous as owning a nice apartment building on the beach in Malibu, California, or something. This is just a very profitable niche. I'm a big fan of value investing. I've also been a long-time Berkshire Hathaway shareholder and get out to the meetings in Omaha every other year and, hear from Warren Buffett, all about value investing. And this is really value investing as applied to real estate. The basic dynamics that you have a very stable business, and one that you can usually acquire at a fair price. Of course, if you can't, it's not a value investment, and we don't buy. But there are still, generally in the greater Midwest, real estate in general and mobile home parks also tend to be fairly priced. So you can buy a park maybe at a 9 cap and perhaps start off with 15% cash on cash return. And if you reduce your costs, if you bump rents, if you fix some old trailers that are abandoned, and put those out on rent-to-own contracts, fix them up, help deserving folks become homeowners, so you improve your occupancy a bit. It's typically not hard to get to 20% cash on cash. And I think that certainly compares favorably to, say buying things in the stock market. There's very little in the world of public securities that pay a 20% dividend. That's kind of why I like this niche, generally better than the stock market, and it's got some other dynamics that I think, indeed, as you alluded earlier, make it better than apartment buildings or self-storage or office or retail or really any other real estate niche.
Yeah, it's interesting. You were mentioning in the beginning, it's not as glamorous as in an apartment, Malibu. Looking, the area where I really started to change my vision of trailer parks actually came from that area around because I live in Southern California here, and I remember I think it was near Palos Verdes. There was a mobile home park that was, or Pacific Palisades, I forget which area, but it was overlooking the ocean in these beautiful places. These homes, these manufactured homes, were worth more than most homes across this country. And I think it's just for the real estate alone. I really am not sure why they were so expensive, but it was on a hillside overlooking the ocean. I mean, and these places were beautiful, and it just totally just shattered the stereotype that I think Hollywood propagates, to just kind of the person with the wife beater shirt on, a can of beer, crack dealers and whatever you want to call it. It really is not like that, and there are many people, especially on fixed incomes, that really love the community and the environment, and the homes are amazing, especially the newer homes that just seem to have everything in them, all the bells and whistles, and are really nice properties.
Basically, mobile homes that they've been making roughly since 1995 or 2000, basically the new homes, they're putting in all the same stuff, building those homes out of all the same materials that state-built houses are built on. When we buy new, the homes come with 2x6 walls, double pane windows, all the same vinyl or carpeting as a regular site-built house, often very nice black GE appliances in them. So modern mobile homes really are, once they're inside one, it can be very difficult to tell that you're in a mobile home, because again, the walls, the doors, the carpeting, everything's going to look just the same as a nice site-built house.
Some of the questions that I would have, it seems like the challenges of a mobile home park, and that would be in the areas of, let's say, evictions. Because I guess you have residents there that own their own, right? And then you also, it just depends on the park, I guess. You have some that the park owns that you rent out. But for somebody that owns their own, how would an eviction happen? I mean, if they're not paying their rent, isn't it a tremendous expense to move one of those out?
It is, and the tenants typically can't afford to move the homes. So what typically, this is very rare, honestly, that you ever have to evict somebody who owns their own house, because those are folks that are much more responsible. They've, again, risen up out of apartment complexes. They own their own house. Might not be as nice of a house as you or I live in, but they own that house. They care for it, and they're not likely to lose the house for what might be, $300, $350 in lot rent. But so honestly, I've only ever had to go through with an eviction on folks that own homes, I think just twice in the last 11 years. It almost never happens. The people that unfortunately we do have to evict are people that are renting or renting to own homes from us, and then they might be paying more like $6. That's obviously a bit more money for them to come up with. And again, those folks, because they're not yet homeowners, may not take as seriously their obligation to pay rent. And so it's very rare that you ever have to evict anybody that owns their own home. They will beg, borrow, and steal and come up with the $300 lot rent. Or sometimes they have simply signed over a home's title to us. These are not. This really has never happened with a brand new home. These are homes more like the one you lived in, the old 1950s or 60s submarine, as you call it. Again, occasionally folks have signed over a home that might be worth $1,000 or $2,000, or they can sell it to someone else, and then they get some money and hopefully pay us off. And then again, there's somebody new in that home paying us a lot rent. So honestly, it's not as big of a problem as you might think.
So someone would have a mortgage, let's say if they bought one,
Yep.
that either they bought it and it was already there and maybe transfer title,
Yep.
or you can buy it new, I guess, and have it moved there and do that. So there can be foreclosures involved with those, right?
It can happen, yeah. Somebody certainly can get evicted. It's just very rare if they already own their own house. If they are renting own or have a bank mortgage on it, then it may be, for instance, the bank that's actually evicting them out of the house, even if perhaps they've paid us lot rent. But yeah, folks certainly do have to pay what they owe, or they will get evicted. It's just very rare that it happens with folks that are homeowners.
Now, does the bank in that kind of a situation, I mean, do they move it out, or they prefer to work with you to see if they can get somebody else in there? Or, I mean, how does that work? Because what does it cost to move like a double wide? I don't know all the terminology here, but a big mobile home out.
A double wide would be, let's just call it 8,000, and a single wide would be 4.
Okay.
These are rough numbers. They vary with the cost of labor nationwide, but that's an average. So in general, yeah, the banks will work with us. Now, keep in mind, a bank would now owe us lot rent because the bank has become the owner of the home, and the home is sitting on our land. So state laws vary. A bank would often get 1 month free lot rent. But at that point, we, as the owners of the land and the bank, would have to come to an agreement. And here, there is no black and white. We are right in the heart of gray with mobile home parks. Some markets that are incredibly strong, we the landowner would have the upper hand with the bank. But if it's a strong market, the bank would also really not have any difficulty finding somebody new to buy that house. So the bank will pay the lot rent. In some markets where it's weaker, the bank has the upper hand. And the bank may say, hey, might take us 6 months to sell the house. You give us 6 months free rent, or we will spend the money to pull the house and move it to another mobile home park, or just move it on to a dealer's lot and sell it off a dealer's lot. So there is no black and white here. It's just case by case, city by city, how you negotiate with banks that may own an abandoned home.
Interesting. Yeah, that's and that kind of zeroed in. I don't mean to zero in on the negative here by any means.
We've definitely gone hard and negative, Bill.
Yeah.
So let's just talk also about all the people we help become homeowners, folks that have no other path to becoming a homeowner other than through a mobile home park.
And I do want to talk about that. I want to talk about the benefit side of it too, just so we can get all the negative out of the way. My first question here for you today is going to be, what would you say was your biggest mistake in this new venture as you moved into a mobile home park acquisitions?
Oh, I guess you could look at it from a couple different angles. You could just say it took me until age 39 to get into the business, when I probably could have done it closer to age 29. Yeah, so, another mistake was that I really viewed myself simply as a value investor buying a mobile home park. What I didn't view myself as initially, was really a money manager. As I mentioned earlier, I now have a partnership. We've raised something on the order of $20 million and have bought other parks. So I've been able to scale beyond just my own rather limited capital base. But, it took me like 5 years to really start thinking seriously about raising money from other people and leveraging what I had learned about running a mobile home park with my own capital. Again, it took me 5 years to really start thinking about raising money from other people and really growing. So I think that was definitely another mistake I made, was just waiting too long to scale my knowledge by, again, raising outside capital and buying more parks.
When you were buying, were you working at the same time doing something else, or were you 100% at that point investing, being a real estate investor?
By the time I was scaling, I was 100% real estate. Started off I overlapped for about a year, so to speak. I still had a regular day job for about a year, and I had, for that first year, I also owned a mobile home park. I was actually working at a Silicon Valley startup, my third, and I could see that startup wasn't doing real well, but I could see that my mobile home park was doing reasonably well, and I was putting no time money into it. So after about a year of sort of having a foot in both worlds, I switched over to running my first mobile home park really full-time, bringing in additional homes, fixing up, expanding the supply of affordable housing, and really improving that park. And then that park led to another park, and that led in turn to some consulting, and then it led to my Park Street Partners partnership. So it's kind of taken on a life of its own. We are 11 years later. I'll probably never go back into high tech.
Well, already I kind of see a benefit there, and I know we haven't really gotten into that part of it, but I could, when you talk about improving, and again, I could be very naive here, but I was a resident, so I kind of know a little bit about. But to me, it wouldn't be just putting in sewer, or whatever might you might have cesspool, whatever it might be, and then and a slab of cement, and running wire, electrical there, and maybe phone or what have you. But I mean, it seems like even adding additional space would, if you have the acreage, would be relatively easy as opposed to apartments where you're talking major construction to add additional units.
So Bill, you've touched on one of the things that makes this a good business, which is that, yes, while it would seem very easy to just, quote unquote, just put down a little bit more cement and run the water and sewer line and create a new lot. The fact of the matter is that over the last roughly 30 years, pretty much every city and county has outlawed new mobile home park construction. They've either literally changed all the zoning so that multifamily exclusively means apartments and not mobile home parks. Or, the little town in Oklahoma where I got my start, they said, oh, sure, you can still build mobile home parks, but you now have to have 2 acres of land per mobile home. And they basically changed the density so that any new residential construction requires 2 acres of land per house, regardless of what sort of house it is. And normal mobile home park density is 10 mobile homes to the acre. So that would be 20 per 2 acres. So again, by saying that you can now only have 1 house on 2 acres, they have changed the density by a factor of 20, which means they've effectively outlawed, without saying so, without sounding nasty or politically incorrect, this town, Slaughterville, Oklahoma is where it is. They've effectively made it illegal to build any new mobile home parks. There's no way anybody could provide affordable housing having to purchase 2 acres of land per house. So that's happened, again, unfortunately, really nationwide. Pretty much every city and county has made it illegal one way or the other to build new mobile home parks, even though it's quote-unquote easy to put in some pipes and some electric lines and put a pad there for the house. The government won't allow it. So once you're in this business, you're really participating effectively in a government-enforced oligopoly. You'll never have any more competitors. And actually, some of your competitors will likely get plowed under made into, sexy apartment buildings, condo developments, shopping malls, what have you. So the supply of your competitors is not only fixed, it's actually shrinking, which again makes this a much better business than, say, apartments, where they are, at least in times, they're always building new apartment complexes. Nobody's building new mobile home parks.
Wow, that's a great. Yeah, I have heard that. I've heard that that is kind of going on a national basis,
Yep.
which we'll discuss more later too, because I'd like to see, how are you planning for that, in terms of growing what you're doing. But we'll go into that a little bit later. I did want to ask you, sort of conversely from the biggest mistake part, what about the biggest success? What would you say was the thing that really just demonstrated to you just the value of what you're doing?
Tough to say. Let me say probably our podcast. We help educate folks on this niche through our Mobile Home Park Investors podcast. That's the name of it. We're running at almost 20,000 downloads a month. And we are both, of course, helping other folks achieve financial independence. But we also, of course, get folks that call us and say, hey, I might want to invest in your upcoming fund, co-own mobile home parks that way. Maybe this is too crazy of a business for me to own one directly, but, hey, Jefferson, can I kick in some money into your next fund? And then we also get some deal flow off that. We do pay referral fees, so people that know about off-market mobile home parks have called us. And like we got a great park in Raleigh-Durham, North Carolina, 15 minutes from Duke and 15 minutes from Chapel Hill. And we got that just from a referral from some folks listening to our podcast. So I would say probably our podcast has been our biggest success for our business.
Oh, that's great. That's another neat benefit. Wow, that's great. Do you usually mention that on each episode that you're looking, and if if people know of properties that there's a referral fee involved?
Certainly, most of the episodes I do. Sometimes I talk about hiring. We also do have a careers page on our website. But usually I'm saying, hey, we're open for business. Park Street Partners, happy to co-own parks with you and happy to pay referral fees for off-market parks. So I do close out most of our shows that way.
Oh, that's great. That's great. Well, that kind of is a good transition into the unofficial topic title here of Are Mobile Home Parks a Better Investment Than Apartments? One of the big questions that I would have would be, with apartments, for example, one thing that is fairly easy, especially if you're investing out of state, and I would imagine you do invest out of state because, just again, the limited supply and trying to find a good deal and so forth, is the management aspect. Now, I can find property management firms wherever, I purchased an apartment almost, I think, if there's parts of Alaska or something that may not have property managers, but there's usually somebody out there that can do that, even if it's just a realtor or a broker's office that can step in. That management part to me seems like it would be an important one, a very important one for you to be successful. But I also I'm curious about how and where do you find the people that are going to manage those parks for you if you don't live in that area?
Yeah, most of our managers come from within our parks. We look for folks that own their own home that shows, some real permanence and commitment to the property, as opposed to folks that might just be renting a mobile home. So we want to see somebody that's a homeowner, and in particular, we typically look for folks that have some of the nicer homes in the community. That doesn't have to mean brand new. It just means, the home's been painted, cared for. There aren't, kiddie toys in the lawn, or, parts of an automobile, a transmission in pieces. We look for somebody that has pride of ownership in their home. And that's almost certainly somebody that would want the whole park to look as nice as their home. it's hard to accomplish that. But, again, just finding somebody from within the community who has pride of ownership. Those are the kind of people that we typically have then as our on-site managers.
Now, that sounds real smart, definitely. But do you run into situations where you have those that, they do have pride of ownership. They've got an impeccable, lot there, and their place looks great. But when it comes to asking for rent, for people that are past due, they feel uncomfortable, or they struggle with that. I would imagine, or if they're a little timid, that might be difficult for you in terms of getting your cash flow going on a regular basis.
Not really. Again, almost all our tenants own their own homes, 90%. So those folks tend to pay pretty well, certainly with a late notice posted on their door. That will encourage them and remind them to pay their $350 lot rent. So it's not that hard. We train our managers to not knock on doors. We tell our managers this is not a collections business. It's their job as the managers to put up a late notice, which usually is about the 6th or 7th of the month. And beyond that, this varies with state regulations, but on average, it's going to be 5 more days grace period. So that might get it to about the 12th of the month, depending on where the weekend falls. But we train our managers that they do not go back to that house. They look in the rent box on the 12th, and if the money is not there, their next stop is the courthouse to file an eviction. So this is not a collections business. It doesn't matter if a manager is quote-unquote timid. They just put up that one late notice and then, again, check the rent box on the 12th and then perhaps go down to the courthouse to file the eviction. And then almost certainly folks pay once they see that they're being pulled into court. They aren't going to lose their house because of a $350 unpaid lot rent. So they almost always come up with the money. So actually filing the eviction is the surest way to actually get yourself paid.
Yeah, it seems like you really have a real advantage that those on the apartment side wouldn't have, in that they own these. These are their homes that they own, right. And whereas an apartment, it's not your home. You don't own it, and the fact that you have the leverage to be able to evict them out of their own home is it seems like it's definitely a leverage there that it would motivate people to respond to those notices.
Yeah, you can look at it that way. These are also folks on the whole that are dramatically better quality tenants than apartment dwellers. They probably were an apartment dweller at one point and said, hey, I'm tired of just throwing my money out the window on rent. I want to own something. And they've now come up out of the apartment. They've bought a mobile home. They do, of course, still pay the lot rent. But once they own that home, they don't pay for their 4 walls. Again, our average lot rent's somewhere around $325. So they've greatly reduced their cost of living from what otherwise would have probably been in most of our markets a $1,000 apartment, maybe even $1,100 or $1,200 a month apartment. They've reduced their living expenses down to $300 and change. And again, they're not likely to say, oh, I'll just give up being a homeowner for $325. They'll, as I said, they'll beg, borrow, and steal. They'll find a way to pay the $325 and keep their costs low, right? We help folks save hundreds of dollars versus what apartment living would otherwise cost them.
What are some of the other advantages you would say over apartment ownership?
So the fact that people own their own home means 2 things that are better than apartments. First, as we touched on earlier, because it's so expensive to move a mobile home, tenants tend to not move their mobile homes. Tenants tend to stay much longer than apartment dwellers. I believe apartments turn over every 2 to 3 years. in our world, we really view the tenant as being the mobile home, not the person in it. As long as that home is there, somebody's going to be paying rent on it. So if a tenant has to leave, they'll often just sell the house, say on Craigslist, to a new owner. And of course, we run a background check on that new owner. But ultimately, we don't really care who's in that house as long as the house is still in good condition. Almost certainly, somebody sold it to someone else. The house is still there. The house is still generating that lot rent for us. And nobody knows for certain, and it varies with the economy, but let's just say mobile homes have a useful life of 50 years. So that means a home will be in a community for 50 years, and then it goes to the dump once it's fully worn out. And certainly there's some homes that have lasted longer. But anyway, that means that our turnover is more like 2% a year with our tenants. So it's dramatically lower turnover. And then also, again, because folks own their own homes, that means all the repair and maintenance for those proverbial leaky toilets and leaky roofs are on the tenants. It's their house. So we do have some repair and maintenance because we have to maintain the land, but that's mostly lawn mowing, some snow shoveling for our parks up in the north, and then certainly plumbing unstops. But again, we don't do all the other proverbial leaky toilet and leaky roof repairs. So our repair and maintenance budget is probably 1/4 what it is for running an apartment complex or site-built homes that you might rent out. So again, our repair and maintenance is a lot lower. And then believe it or not, we actually have at least as much depreciation, sometimes more, and we get to take down our depreciation over about half the time. So that means we get roughly twice the tax benefit versus folks investing in apartments. Our improvement, we do have improvements to the land. It's just not bricks and mortar, which for 27.5-year depreciation schedule. Our depreciation is things like signs, fences, roads, pipes, sometimes, pumps on a well house, pumping up the water. On average, we depreciate or amortize about 80% of our acquisition price over maybe 17 years. So just because we can take down the same or more in about half the time, again, our tax benefit is about twice what it is versus apartments and other real estate classes.
Any other key benefits?
Well, yeah, as I mentioned, the supply curve is really fixed and actually shrinking. So the implications there as, again, no new parks are built and maybe 1% of existing parks are plowed under every year. That means the supply curve shrinks about 1% a year. The demand curve for housing for our business grows at about 1% a year with population, but it grows probably another 1% a year as some of these parks are closed and all those homeowners have to go somewhere. So we have probably 2% demand increase roughly and 1% supply shrinkage. So buying anything with leverage that has that kind of supply and demand tailwind going in your favor again makes it a fairly easy niche to make money. So that's another thing that makes this better than apartment.
What's a good cost per door, or I don't know if you say per space or unit, for a mobile home, that park?
Oh, let's just say round numbers, 20 to 25,000 per pad. So that would not include the house. And sometimes you do find parks that come with houses, and those would add some value, almost always, unless the house is a complete teardown. But yeah, we view this business, the best on mobile home parks really are parking lots, and you own none of the houses. So just thinking about the cost per pad, yeah, that could be $20,000 or $25,000 per pad. So a 100-space mobile home park might cost you $2 to $2.5 million.
Okay, gotcha. And what kind of a income are usually generating per unit or per pad?
Let's say for a park running valued that way, probably the lot rents would be, again, sort of 300, 320, 300 to 350, something like that. So let's see if it was full, see if I can do all this in my head here in real time. So you'd have about, 35,000 a month in gross receipts for 100 pads at $350 a piece. Your expenses would probably run, depends a little on whether the park is master metered for water and sewer or whether that's direct billed. But let's just say you might pay 150 in expenses per pad, so you're netting out 200 per pad in profit. So that's what, 20,000 a month, if my math is right. So that's 240,000 a year in profits. So at a 10 cap, you'd pay $2.4 million for that property. So about 24,000 a pad. That would be a typical middle of the road, maybe slightly larger, but typical middle of the road deal.
And is there a typical demographic, or at least one that you would expect or seek to achieve?
Not really. That varies widely. We have some parks that are nearly 100% Hispanic. We have other parks that are much more diverse and even almost entirely white. We have some parks with a much higher senior component, obviously folks 55 and over, and we have other parks where, most of the tenants are sort of younger families in their, 20s, just getting started out in life. So the demographic vary widely.
Yeah, because my initial thought was that, folks on fixed incomes would be probably a real likely, candidate anyway. And in the Southern California area, most of the parks that I'm aware of are primarily seniors, 50 plus, 55 plus. Yeah.
Yep.
Well, great. Thanks. Those are some great benefits that I wasn't aware of. So there's some good stuff in there. What I guess maybe one you didn't mention that I have heard in the past is that it is not as competitive as buying apartments. It has become more popular over time, but I hear that it's not as competitive as because right now the apartment communities are just it's a battle out there, especially in the major metropolitan areas.
Yeah, I would say that's fair. This is still a largely undiscovered niche, so the competition is not as intense for these properties. This is also a much, much smaller niche. My estimate is that every year there are approximately 1,000 mobile home parks put up for sale, whereas there are probably 100,000 apartment complexes, and I don't know, there's something like 5 million homes that change hands every year. So this is a really small niche. It's just not possible to say, hey, I love this niche, I'm going to put to use, $1 billion this year. This is really smaller funds, mom and pop, that kind of thing. It's a much smaller niche.
And if there's folks that are listening, a lot of our listeners are still sort of pondering what particular area they're going to go into to generate some additional cash flow, and of course real estate is the focus of our podcast. But what advice would you have for those out there that are 50 plus that are considering mobile home parks? What would be your advice for them if they're interested in getting involved?
I would say, again, take a look at our website at parkstreetpartners.com. We've got some resources there for folks that are considering purchasing a mobile home park. This is indeed a good business. It's one that folks can get into for relatively little money. I know one guy who got started just buying the actual mobile homes. And he then So again, he owned just the home. He was able to fix it up, flip it, make some money, do another, sell it on terms, start creating, a couple hundred a month passive income. So he got started for, somewhere between $0 and maybe a couple $1,000. I think he was starting, doing the rehab work on the homes himself. If you've got 10 or 20,000, then that's enough to put down on a small, maybe 5 to 10 space park. And again, you can get started small. You can rehab homes yourself. You can put them out on rent-to-own agreements, and again, increase your passive income. So anyway, again, that's one of the things that makes it such a good business. You don't have to come up with hundreds of thousands or millions of dollars down for your first property. You can do it for four figures or 5 rather than the 6 or 7.
Yeah, that's great. That's great. Well, what's ahead for your business? What's really exciting you about where you guys are going and the things that you're doing?
Well, we're about to launch our third fund. So we anticipate we will purchase another 10, maybe 15 parks over the next, 12 or 18 months. We're just we're growing. We're hiring folks. We're getting the right people in the right seats in our organization. It's nice to be part of something that's constrained not by capital, not by deal flow, but it's just constrained by human capital. That's what holds us back. We just can't find enough people fast enough to help us grow. So we're hiring and we're growing.
That's great. Well, we've kind of come to near the end here of our interview, and it's a shame because I still have a lot of questions, but hopefully there are those like myself that folks that can contact you later, and we'll get into your contact information just a bit here. But
Yep.
Hey, fellow old dogs, before we jump into our wrap it up session, I just wanted to let you know that an important part of being a successful real estate investor is knowing how to regularly reduce your expenses. It's a big part of what I do every day to maintain a healthy real estate portfolio. Well, I try to do the same thing with my personal finances as well. And when I heard about a life insurance company that gives exclusive rates to those of us old dogs who try to eat right, exercise, and stay healthy, I got very stoked. Like saving money on your car insurance for being a good driver, Health IQ saves you money on your life insurance for living a health-conscious lifestyle. For those of us who are trying to be healthy and keep our expenses down at the same time, it just makes sense. Learn more and get a free quote at healthiq.com/old dog. That's healthiq.com/old dog. We have a section we called our Wrap It Up, and it's kind of like a lightning round area where I ask you a series of questions about resources and that can help our listeners to kind of beef up their education and knowledge about real estate investing. So if you are ready, we can go ahead and wrap it up.
Yeah, that'll be great.
All right. What is your favorite real estate book?
Probably Sam Zell's Am I Being Too Subtle? He's the largest mobile home park owner in the world. And he's just written this book about his history and investing in general and in mobile home parks. So I think that's the best real estate book.
That's great. That's a new one for me. I love it. How about your favorite business book?
Probably Snowball, which I think is the best biography on Warren Buffett. It covers not only, how and why he's a value investor, but it also covers his personal life. Frankly, I think some of his shortcomings and some of the ways that he kind of shorted his family, given his intense focus on business. So I think it presents a very well-rounded viewpoint on Warren Buffett. So I really like that book.
Neat. How about your most valuable website for success?
Honestly, I have no idea.
No problem. How about a favorite quote?
I really I think it was Henry Ford who said, if you think you can, you're right. If you think you can't, you're right. The power of the mind is incredible. And I've found just trying to think more positively and bigger. And I alluded to this earlier about how I just wasn't thinking big enough when I got into this business initially. But just what what you think of yourself and the world's possibilities make a huge impact on your outcome in life.
Great. Now, this is sort of our final question here. If, let's say, something catastrophic happened, you lost everything, absolutely everything, all your assets, all you have is just $1,000 in cash, what would you do with that $1,000 to relaunch your real estate investing business?
That would probably be a very modest retainer for a law firm to put together my next offering memorandum to raise $5 to $10 million and get back into this business. That's what I do with it.
That's great. You got to have to find a cheap attorney for that one. That's great. That's great. Well, I'm sure there's a lot of folks here that really would like to find out more about what you're doing and also about mobile home investing. What's the best way for people to reach you?
So they can come to our parkstreetpartners.com website. I'd also encourage folks to check out mobilehomeparkinvestors.com. That website will link them through to our podcast and to our LinkedIn group. We've got over 4,000 folks there trading deal flow and tips and tricks and questions. And it's also a link to the industry calendar that we keep. We have a calendar folks can just sync right into their phones or computers of upcoming mobile home park trade shows, some earnings calls from some of the large REITs and whatnot. So all that is mobilehomeparkinvestors.com.
Great. Well, we have a tradition here at the Old Dogs REI Network that I think you know about, that we always close out our show with our guest's best old hound dog howl here. So if you are ready, I don't know if you had a chance to practice, but if not, well, you're out of luck. You just got to do it. So if you are ready, let's go ahead and close out the show with your best hound dog howl.
How about that?
That was good. It sounded recorded. It was so good. Well, that is great. Jefferson, it's been such a pleasure to have you on. Thank you so much for helping educate us about mobile home parks and what a good investment they are.
Well, I've enjoyed being on the show. Thanks for having me.
Well, thanks. And I also want to thank all of our Old Dog listeners out there for joining us. I know there's a lot of other things you could be doing right now, but the fact that you've taken the time to join us means a lot, and we greatly appreciate it. Please note, everything we've presented here today can be accessed in our detailed show notes on the Old Dogs website at olddogsreinetwork.com/blog. And look for the episode about mobile home parks. That is it for today. That is our show. Remember, cash flow is king and real estate investing the means. Until next time, keep moving forward and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.